So this is the pound dollar analysis for Tuesday the 14th of November. Now let's have a look what happened with prices from the market open. So we're just going to grab a pen, and as you can see in the past, we were respecting this 30.93. With market opened, we did gap down, which is a bearish sign. We did not go up to fill the gap, and we had the initial move to the upside. It was negated by some selling momentum, and we saw this very strong bearish candle. Now, this very strong bearish candle came below this major level of support just here in around 31.47. We did not get a retest of the 31.47. Instead, we got a small retracement and further selling continuation. We were expecting possibly 30.93 to act as a support again, but the strong momentum took us below this 30.93. Now we've come down to 30.60. So if we have a look to the left of the chart, let's just grab this, zoom out a bit. So if we have a look at the left of the chart, we did see some buying momentum after this sell-off, which is related to the Bank of England dovish interest rate decision. Just there, we did see the price come all the way down to in around this 30.40. Another retest around 30.60. So if you have come down to 30.60 in around that 20 pip zone or so, come down not all the way down to 30.40, but into this zone just here. We've had a bullish reaction so far. We've not had a bearish reaction from these 30.93. Has not acted as resistance. Instead, we've traded through it pretty comfortably. So where do we expect prices to go from here? Well, in light of the most recent trend, just there, we could potentially see more upside momentum as we are gone back into this this channel just here in between the 30.93 that we had here and 400 period moving average. So we had a bit of a channel developing here, and we've come back into the channel. So we'll be looking for prices to get all the way up to 31.47, see if we get a bearish reaction, trade the market all the way back down to 30.93, possibly all the way back down to 30.60, where we could potentially see a double bottom coupled with the support that we had here in around the 30.60 and 30.40. Now, yep. But we just have to be aware of possibly this 200 period moving averages here. It has come down quite a bit due to the pretty strong sell-off that we've seen in the pound against the US dollar. So we'll just have a look where this 200 period moving average is. 200 period moving average is currently sitting at 31.36. So it's not very far from where we are at the moment. We're at 31.20, so it's about 16-ish pips away from us. And also 31.47 is about 27 pips away from us at the moment. So it's pretty close to the upside, and we've got the 400 period moving average if we do successfully navigate those levels as well. The 400 period moving average is currently sitting at 31.64. So we do have a bit of a zone setting up here. Just there, we've got a 400 and 200 period moving average, 200 period moving average here in blue, 400 period average here in black, and we've also got this major level at 31.47. So in and around this zone, we could see some selling momentum to take us all the way back down to 30.93, possibly breaking the below to 130.60, and below that we're looking at 130.27 before moving on to 130, the round number. Ultimately, in light of the most recent trend, we've had slight pullbacks, and we do seem to be having continuation. So we're looking for the potential for upside targets. If we do successfully navigate all these potential areas of dynamic resistance, the moving averages and this horizontal resistance, and we were looking for the most recent swing highs in around this 30, I'd probably say in around 132. We'll see our prices behave around that the round number of 132 before we see continuation. Possibly, if we do successfully navigate 132.30 before we get up to 32.81. If we get up to 32.81, we would have negated pretty much most of the selling bearish momentum from the Bank of England's dovish interest rate decision and subsequent press conference. But as we've seen more recently, is as we have come up to the open, the open of the news candle. In regards to the Bank of England interest rate decision, we have seen quite a bit of selling momentum come back into the market. So the bullish price action on the pound has not negated the bearishness due to the Bank of England at present, because as we have come up there, it does seem to be that there are market sellers pretty much in and around this area here, in around this 132.20, just sitting below it, the open of that candle. So if we do a breakdown again, we've mentioned levels below, so we're just going to have a look at the daily and weekly time frame before wrapping up here. So if we go over to the daily time frame, and let's just get the scale on here correct. We're still in a bit of a range at present. So if we were to just draw this roughly on the charts, so we've got a bit of a range at the moment. We've got the upper end of the range in around that 32.81, and we've got lower end of the range all the way into this 130.50 essentially. Let's just get this on there correct. So, but the lower end of the zone is let's just get that in around that 130.50, and the upper end of the zone is in and around this 130. Let's just get this correct. 133.50, 133.50, so 130.50 and 133.50. So there's a 300 point zone just there where we are seeing prices somewhat oscillating, pretty range bound trading at the present. So we have not broken out either to the upside or the downside. But as we have seen a move to the downside from this 136.57, we are consolidating at the moment. I think we're just waiting for the next leg of a news event. We do have the interest rate decision by the US Central Bank, so we could potentially see a breakdown in prices if we trade closer to the channel in and around the news event. We could potentially look for other downside targets, particularly as the Bank of England said its actions are pretty much determined by the ongoing Brexit negotiations and so on. So let's just have a look at the weekly time frame. So here on the weekly time frame, again, we've had a series of higher lows, but we've had heavy retracements, somewhat negating the bullishness. We've had a strong run up to 36.57, and we've had a very strong pullback so far, all the way back into this 20-period moving average. All the way into the 20-period moving average. So we're into an area where we might see some support, and currently the 20-period moving average is sitting at 131.27. So yeah, we've already mentioned 131.27. That's where our 20-period moving average is, and which may act as a resistance and possible support. But as we can see at present, we've got candles with pretty small bodies, indicating not a lot of volatility so far, and this degree of even though we have been bearish, there does seem to be prices do seem to be stalling a bit in around the zone where I've mentioned that there is a bit of a range, we're a bit range bound. But in light of the most recent trend on this weekly chart, we've had a series of bearish candles. We've had an odd anomaly of a strong weekly candle, a bullish candle, but we've not seen bullishness continue into the week, which has followed. So we've had strong bullish weeks on two occasions, closing near their highs, but we've not seen the continuation in the week which has followed, which indicates that it was somewhat impulsive and maybe news related. So yep, that should wrap up the pound dollar analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.